Hello everyone, it's Kate Hill from Adviseable Property Buyers. I'm here with Tina Howes from Smartmove, one of Australia's leading and most award-winning mortgage broking advisory firms. They specialise in residential and investment property lending, and I've come to ask Tina for an update on what's happening in the residential lending space at the moment. Tina, tell us what's new in the lending environment at the moment.
Okay, thank you, Kate. So we've seen a lot of changes in the lending environment since we last caught up.
Yeah.
Probably the biggest one, we've seen a reduction in interest rates, which is fantastic.
Yes.
But we expected it.
Yes.
But we're seeing the majority of lenders pass that full 25-point rate cut on to consumers, which is brilliant.
Yeah.
People are seeing a relief in cash flow in that respect. We have seen some lenders choose to not pass the full amount on. And there's also whispers of more rate cuts. The Reserve Bank are suggesting that there will be further rate cuts this year.
Yeah. Is there a particular reason why some lenders don't pass that cut on?
Every lender has the choice whether they want to pass that on or not. The lender, the spiel that they'll give you is that they account to their shareholders first and foremost. So ANZ, for example,
yes.
Not that long before the rate cut, they came out and said that they'd gone too aggressive in terms of tightening up credit policies on the back of the Royal Commission. They lost a lot of business from that. Their volumes were down. And I would say that they've seen the rate cut as an opportunity to increase their bottom line on the back of that loss of business.
Yeah.
Baffling from my perspective, because it's hard then to place a client with ANZ if their rate is,
not
10 points and not competitive, even if it is just the 10 points. Yeah, so, but there were some lenders also that had very cheap rates that haven't passed the full rate cut on, because they still see that a 20-point reduction is still a competitive, different point of differentiation for themselves. In addition to that, we're seeing, and it's highly related, we're seeing very low fixed rates out there.
Yes.
People might be tempted to jump in and take advantage of those fixed rates, but in comparing the current rates to the fixed rates, there might not be that much of a difference. And if we do see further rate cuts, then you could be left paying more because of those fixed rates being appealing now, but further rate cuts might bring variable rates down lower. So I would think hard about that.
Yeah.
Obviously every circumstance is different.
Yeah.
But yeah, don't be caught up in the whole 1 year or 2 year special low fixed rates. Talk to your mortgage broker first.
Tina, weren't there some rumours recently about easing on assessments of borrowing capacity?
Yeah, so about a month ago now, APRA came out. Let me just explain who APRA are. They're the prudential regulator that imposes restrictions on deposit-taking institutions, banks, on their lending criteria. Their goal is to ensure that when you put your deposit in a bank, that it's protected. Okay, so when I'm required to do a home loan assessment, the banks use what we call an assessment rate. Now, not that long ago, a minimum amount was implemented that the banks had to adopt, and that was 7.25%. Now, when we saw that implemented, we saw borrowing capacity significantly reduce, and all of a sudden people could borrow less than they could a month before. Now, what APRA is suggesting is, because of the current low interest rate environment where you're seeing interest rates definitely sub 4%, some banks even sort of mid threes, they're saying, well, that's what the actual rate is, but you're assessing the home loan at 7.25%. Now, in the past, 7.25% was actually a fair and reasonable rate, because even though you can afford an interest rate at that low level, you want to make sure that when the economy goes back to a level where they deem, higher interest rates are appropriate, that you can still afford your loan. No one wants to have to sell just because rates have gone up.
Yeah.
So that was all appropriate, but now they're saying the gap between that, it's going to be a decade before we could at least see rates at that level. And just for those that aren't understanding of why interest rates go up and down, if interest rates were to go up, that would be on the back of improved inflation, global growth, economic prosperity, wages growth, you name it. The economy would be going gangbusters for that level of interest rates. Yeah, so APRA have acknowledged that and have essentially presented to the banks that they propose to reduce that assessment rate from, and I'm a little bit excited about it, but from that 7.25% to giving the banks a freedom to choose their own rate. And they're proposing that whether it's a 2.5% above an actual rate. Right. So that might be a 6.5% assessment rate as opposed to this 7.25%. Now, the consultation period was until the 18th of June, where the banks have now, apparently, we haven't really seen it in the media as yet, but it's gone back to APRA. And we're expecting in the next couple of weeks, hopefully any day now, for APRA to basically come out and hopefully positively say that we can remove that rule. Now, the unknown, because we haven't seen this before, is how is that then going to play into the banks? Are they going to all blanketly come out and say, great, our assessment rate is no longer this, it's this? We don't expect it to come out like that. It might be each bank will have to assess their capacity to take on additional business, their appetite for new business, and then how do they then reduce that level? Because to put it into practical terms, if you had a $100,000 income, $5,000 credit card, $3,000 a month living expenses, you can borrow say $400,000, okay, at a 7.25% assessment rate. If I reduce that assessment rate to say 6.1%, then you can borrow $490,000. So you can see there that your borrowing capacity significantly increases, which is then going to hopefully give renewed life and activity and borrowing capacity into the market to then transfer to property prices. Does that all make sense?
Yes, absolutely.
Yeah, so we're eagerly waiting on the sideline. I have clients that are wanting to refinance, but there is a suggestion that we're only a month off. Let's wait and see how this pans out, because particularly if you're looking to extend an interest-only period, but your borrowing capacity only allows you to get maybe one additional year. But if the changes come through, then potentially with a certain lender, it might give you another 5 years. So that's just sort of where we're at the moment. It's a bit of a watch and wait and see.
Yeah. Tina, what in particular have you noticed that's happened in the mortgage broking world, in the lending space, since the federal election in mid-May?
Yeah, okay, it's a good question, Kate. I would say, without a doubt, there's renewed confidence. Irrespective of which party has gained power, we always see around an election period that people sort of sit on their hands and just wait.
Yeah,
there's that uncertainty, so they sort of sit tight. So we've had the election now, people can get on with it. There's renewed confidence, but we're seeing auction clearance rates up. In particular, I've seen clients that have been pre-approved maybe 12, 18 months ago, wanting to softly buy, definitely wanting to buy, but just not in any sense of urgency, and been waiting for this bottom of the market. Now we're hearing that potentially we've reached the bottom of the market, whether that's on the back of the interest rate cuts, as well as the potential APRA changes. But investors also being relieved that there's no changes to negative gearing, so bringing those back in. We're certainly seeing those buyers come back and say, okay, no, we think we want to get in there because we're scared that things might go back to the days where you're going to auction after auction and that hot market. So I've seen that from multiple clients, and we've seen that across the office as well.
Yeah. That's great.
Yeah, it's fantastic.
Thank you very much.
That's okay. Thanks, Kate.
Whether you're looking for a refinance, a new loan, or simply a financial health check, Smartmove can help you. They have a strong relationship with a panel of over 30 lenders and can get your finance moving. So contact Tina today.